Hello everyone, thank you for being here. So there's been a lot of talk lately about the UK economy. In fact, we've seen a lot of negative headlines in the press, or some commentator asking if the UK has become an investment no-go area. But is that really fair? Or is there more to the story than what we see in the news? I am Renzo Desbordes, Investment Director at Flying Colour. Today, I'd like to explore this question with you, looking beyond the headline, examining the data and considering what it all means for you. So, is the UK truly uninvestable, or are there reasons to be optimistic? Let's find out together. As we look at recent headlines about the UK investment climate, it's clear there is a strong narrative of challenges and uncertainties. Behind each headline, there's a deeper story, one that reflects broader trend and concern. Some stories highlight the speed of infrastructure implementation. Others point to shift in taxation and policy, which can influence where companies choose to invest and grow. Also, we see stories about innovation and talent, and there are accounts of companies reconsidering their presence in the UK as a whole. This story helps us to understand the real challenge facing investors in the UK today. It's important to recognize that headlines aren't just noise. They do reflect a concern. Over the past few years, UK GDP growth has been sluggish, barely moving the needle compared to other major economies. The productivity gap between the UK and the US is widening, with the UK falling further behind in terms of output and efficiency. When we look at productivity gain, the UK performance is as disappointing as France. Both countries have struggled to make meaningful improvements. This fact highlights genuine challenge for investors and policymakers. The headline may be dramatic, but the underlying data shows there are real issues that need to be addressed. And it's true, the UK economy is facing challenges, particularly in the manufacturing sector, where it's struggling to keep pace with global competitors. But there is another side to the story. The UK has consistently excelled in services, particularly in areas like finance, professional services, and technology. In fact, our service sector has outperformed many of our European peers, helping to offset some of the weaknesses in manufacturing. The strength in services is a key differentiator for the UK economy and an important factor for investors to consider. It shows that despite the headline, there are areas in the UK where it continues to lead and innovate. And not only that, but the UK continues to stand out as a highly attractive destination for investment. According to a recent survey from Ernst & Young, Global CEO ranks the UK as the second most attractive country for investment, just behind the United States. And look, the proof is in the pudding. The UK is the second most popular destination for international investment projects in Europe, ahead of Germany. And this international confidence highlights the UK's enduring appeal and its ability to attract capital and businesses from around the world. Also, remember, even though the UK is attractive for international investors, there is an important distinction to keep in mind. The UK stock market doesn't mirror the UK economy. Over the last 30 years, the UK economy has grown at a mediocre pace, but the stock market has grown at a much faster rate, close to 3 times as much in fact. This means that investing in the UK stock market is not the same as investing in the UK economy itself. The market performance is influenced by a range of global factors and companies, many of which that have only limited exposure to UK domestic economy. For UK investors, understanding this disconnect is crucial when making investment decisions. When we look more closely at the UK stock market, it becomes clear that it's not particularly UK-centric. In fact, Only about of the quarter of the revenue generated by companies in the FTSE 100 are actually linked to the UK itself. The majority come from international operation. So, when you invest in the UK market, you're not just buying into the domestic economy. You're purchasing share in financial company with significant reach outside the UK, food and drink businesses with strong international exposure, and global healthcare firms that operate well beyond British border. For investors, this means that UK listed stock offer a gateway to a diverse range of sector and geography, rather than a pure play on the UK economy. In summary, the question is not if the UK is investable or not. The answer is way more complex than the headline suggests. Yes, there are real challenges, but there are also significant strengths. Investing in the UK means gaining exposure to international businesses with attractive valuation. The real question is how investors can best navigate its unique mix of risk and opportunity. As I have talked about investment, I must remind you that capital invested is at risk and future performance cannot be guaranteed. If you have any question or comment, please contact your financial advisor. Thank you for your attention.